Stocks are going to continue to go higher. 5 years from now, they'll be higher than they are today. Bitcoin, definitely going higher. 5 years from now, it'll be higher than they are today. You go through all these assets, like they're going to keep going up. Why? Because they are never, ever, ever going to stop printing money. That is all that matters. You either understand that and you express it in your investment portfolio, or you don't. But if you don't express it, you are going to take it on the chin. US dollar has lost 28% of its purchasing power since 2020. But about half of US citizens hold 100% of their economic value that they have worked hard to earn, or the government gave it to them, that they has lost 30%. You want to know why the average family can't survive? Do you want to know why people can't afford things? Do you want to know why the average person is struggling? It's because of that. They are not able to grow their salaries or their wealth in their investment portfolio at a faster pace than the debasement of the currency. And so they fall further behind.
Let's start with the million-dollar question. Are we heading for a crash? Pompliano says it depends on how you define it. A true crash down 30 to 40% is always possible, but rarely predictable. However, corrections, those are part of the game. They're normal. What matters more is your time horizon. If you're looking short-term, sure, volatility is real. But if you're investing with a 5-year view, Pompliano is confident. Bitcoin, stocks, and other quality assets will be higher.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Nobody ever knows if there's going to be a real crash. A crash to me would be like we're down 30, 40%.
Okay, a correction.
Well, of course, there's going to be corrections. You go up a little bit, you correct a little bit, you come back. But I don't think that what people are ultimately trying to get at is it sustainable, what is happening in the stock market and with Bitcoin? And my point to them is it depends on what your time horizon is. But yes, I do believe it is sustainable. Now, why do I believe it's sustainable? Think about how crazy this is. In 2020 to 2021, we went up. In 22 and 23, we went down. And now we're back up again. So over a 5 or 6 year period, if your time horizon is shorter than 5 years for your investment portfolio, that's a whole different conversation. But over 5 years, it was not only sustainable, we just kept going higher over the medium term. And so I think that stocks are going to continue to go higher. 5 years from now, they'll be higher than they are today. Bitcoin, definitely going higher. 5 years from now, it'll be higher than they are today. If you go through all these assets, like they're going to keep going up. Why? Because they are never, ever, ever going to stop printing money. That is all that matters. You either understand that and you express it in your investment portfolio, or you don't. But if you don't express it, you are going to take it on the chin. US dollar has lost 28% of its purchasing power since 2020.
Wow.
That's
28%?
crazy. 28%. Most people are like, oh, since 1913, the US dollar has lost 99% of its purchasing power. Like, we got screwed.
Oh my
like,
gosh.
Homie, wake up. In the last 5 or 6 years, it has lost 30%.
Okay, that's crazy.
So now all of a sudden, you ask yourself, hold on a second. How many people? The stats all vary, but about half of US citizens hold 100% of their economic value that they have worked hard to earn, or the government gave it to them, that they has lost 30%. That's like saying I have $100 to my name. Now I can only buy 70 cents worth of goods or $70 worth of goods. Like, hello.
I know.
You got to become an investor. So do you want to know why the income inequality gap is widening, or the wealth inequality gap is widening? It's because we have an education problem. And guess what? The government is responsible for some of this. How many people would love to invest in private companies, but they can't because they're not accredited investors? Then how many people are being boxed out or significantly slowed before all these fintech platforms came along in getting stock brokerage accounts, in getting some sort of investment account? Thank God for the Robinhoods, Weebles, public.coms, eToros, etc. Thank God for the Coinbases, the Krakens, the Geminis, the Binances, etc. Because those platforms now give people access to investment assets. And so you can look and see and say if 30% of the dollar's value has been lost in the last 5 or 6 years, you have to be an investor. Now that feeds into Bitcoin is the hurdle rate. If you can't beat it, you got to buy it. Because if you look at the S&P 500, up 100% since 2020, priced in dollars, price it in Bitcoin, the S&P 500 is down 85, 90%. So it is all about relative comparison. What are you denominating the asset in? And ultimately, what we are living through is we are living through a transition period where a lot of principles that people thought were timeless, that people thought were safe, that people thought were prudent, are proving to be disastrous if you follow it. If you have 40% of your portfolio in bonds as a modern, as an archaic 60-40 portfolio would historically tell you to do, you are getting crushed. TLT is down 50% in the last 5 years. You are getting crushed. 60-40 portfolio does not work the way it used to work because they are debasing the currency at an accelerated rate. It's hurting treasuries. Then if you look at 1971 to today, the inflation rate, which is the debasement of the currency, has actually been 4%, not 2%. So when you calculate what is your return, here, you want to hear a crazy stat?
Sure.
Listen to this. This one's going to blow your guys' mind. New study from JP Morgan, 2002 to 2021, I believe. The average investor return, 3.6%. The average investor, the S&P during that period, 9.5%. So the average investor underperformed the S&P 500. That's bad. But you want to know the craziest part of that story? If you earned 3.6% per year, which is what the average investor did, the debasement rate of the currency at that same period was 4%. That means that the average investor actually had a negative real rate of return for 20 years. A negative real rate of return. They did not outpace the debasement of the currency. You want to know why the average family can't survive? Do you want to know why people can't afford things? Do you want to know why the average person is struggling? It's because of that. They are not able to grow their salaries or their wealth in their investment portfolio at a faster pace than the debasement of the currency. And so they fall further behind. And it's the people who understand this stuff, the people who know how to invest, they're the ones who get ahead. And that is the story of citizens in America, the affordability crisis, the housing crisis, and all of the wage growth is all told in that one thing. The average investor from 2002 until 2021 actually had a negative real rate return on their investment portfolio, and they got crushed.
So where does Bitcoin fit into all this? To Pompliano, it's not just an investment, it's the benchmark. If you can't beat Bitcoin's performance, you might as well own Bitcoin. Simple as that. He makes the case that Bitcoin has outperformed everything since 2020, including the S&P 500, which when priced in Bitcoin is actually down 85 to 90%. The reason? Because while fiat currencies are being printed into oblivion, Bitcoin remains scarce, secure, and globally trusted.
So the dot-com bust happened because the companies were all fake.
Well,
okay. So everyone's like, oh, the S&P 500. Oh my God,
right.
Look, the S&P 500 is going up so fast. Well, ladies and gentlemen,
but how do you
why is it going up?
How do you know it's not frothy? Like, it feels frothy to me.
Here's a great data point. Did you know that this year, the Mag 7 has gotten cheaper on a valuation basis? Their earnings have grown faster than their stock price. So actually the Mag 7 is cheaper now than it was at the beginning of the year.
Okay.
So why is that important? Mag 7 is driving majority of the S&P 500 return. Basically, the 490 companies at the bottom of the 500, they ain't doing anything. They're not performing. It's the top 10 companies. So if the Mag 7 got cheaper, that actually means that the companies that are driving the return are more attractive today on a valuation basis than they were at the beginning of the year. So everyone's like, it's frothy. Well, like, hold on a second here. I talked to Jordy Visser last weekend on Saturday. What'd he say? Earnings don't lie. These companies, look at Facebook's last earnings report. They are printing money. Bang out performance. And so when you look at that, you say to yourself, hold on a second here. What is everyone talking about? It's frothy. It's this, it's that. Are you guys looking at the same thing I'm looking at? Because all I see is global M2 money supply is going to the moon. And guess what asset prices are doing? They're repricing. But the invention of AI and its use inside of these big companies is driving earnings. They're becoming more efficient. How many times do I have to say Palantir says that they're going to continue to grow revenue, but they're going to do it with 800 less employees. 20% reduction in their employee base, but they're going to keep growing. Hello, AI. New report out that young people has seen their unemployment rate grow by about 5 percentage points. Young people can't find jobs at the same rate that they used to be able to. What happened? AI is replacing their entry-level job. So you start to say to yourself, the AI story is actually driving productivity and earnings growth. If that is happening, then of course the company should be worth more money. And so if the Mag 7 is cheaper today than it was at the beginning of the year on that valuation basis, it's not frothy. You could start to make the argument that actually the company should be valued at more than they are right now because they are growing faster and their earnings are actually proving out what they've been saying. It was at the beginning of the year, maybe there was some frothiness. And so my guess is we go higher. So I do think that the United States will buy Bitcoin at some point, but I think that right now they got a whole bunch of stuff they're trying to work through. I was of the opinion earlier this year that they for sure were going to buy Bitcoin. Yeah. I think they thought they were going to buy Bitcoin.
Why are they not?
Well, I think that they now realize that there is quite a bit of legislative checkboxes that they need to do in order to buy the Bitcoin. And so when you go in and you're like, hey, we want Bitcoin on our balance sheet. Okay, well, let's stop selling the Bitcoin that we've confiscated. If we confiscate more Bitcoin, we're not going to sell that. Okay, that's a good start. They said, we have plans to buy more Bitcoin. Great. But doing it requires legislative approval. And I think that that is going to be a little bit harder. And so I do think that they will do it. I just don't think it's going to be a short-term thing because of the mechanics from a government perspective.
Pompliano also touches on the U.S. government's evolving relationship with Bitcoin. Although he previously believed they'd add BTC to their balance sheet, he now sees regulatory hurdles delaying that move. However, he still believes they will eventually buy Bitcoin. It's just a matter of timing. For now, individuals still have the early advantage. So here's the bottom line. Pompliano isn't just ranting, he's laying out the hard truth most people are too afraid to say.